Hey everybody, I hope everyone's doing well and had a good day. This is the overview of the Emini 5-minute chart for Friday, November 15th, 2024. Here's the daily chart, and actually let me start on the weekly because it's Friday, it's the end of the week. The market often does something in the final, back half, or I want to relate this to the 5-minute chart. When you're watching the 5-minute chart and you're watching a bar form, market often does something in the final minute to dramatically change the appearance of the bar. And you'll hear Al talk about that. Here, not the greatest example, but it works. If you think about the 60-minute chart, we opened near the high of the bar, small tail above, and then look at bar 12. The first 12 bars of the day, 60-minute chart, bear trend bar closing on its low. We'll often see one of these red bars. These are multiples of 12, the 60-minute chart bars. They'll often do something to dramatically change the appearance of the bar. And that's, markets are fractal. That happens on any time frame. It doesn't matter. So that's why when I'm looking at the weekly chart, what I'm thinking of is that Friday will often be a trend day, and it will dramatically change the appearance of the bar on the weekly chart. So what do we have? We have this bull channel. We've already had 3 or 4 pushes up, and then all of a sudden we have this big bull bar, one of the biggest bars, maybe the biggest bar in the entire bull trend. And it's clearly occurring more than 20 bars into this trend. It's maybe 40 or 50 bars into the trend. And you always have to be wondering if a breakout 20 or more bars into a trend, whether it's exhaustion or a measuring gap. And exhaustion doesn't necessarily mean reversal. It just means the bulls are exhausted. We have several legs up. The bulls are buying all the way up, but we enter the channel phase and they start taking profits at new highs. Then you get this huge bar, and that's going to attract profit taking from the bulls. The bears know that. The bears see these deep pullbacks, and if they sell highs and scale in higher, they can make money. So we have bulls selling to take profits and bears selling to initiate shorts up here, more than likely. That was my concern with this big bull bar. I thought it was probably more likely an exhaustion gap, a breakout late in a trend. And then the daily chart, I feel like I'm repeating myself, but that's sort of the way it has to be. Every time I come to this chart, I think the same thing. We have the bull channel, higher highs, higher lows, but then we get this breakout. And if we just dissect this breakout by itself, first of all, let's look at the breakout point. We broke out of this swing high, good buy signal bar, and then a good bull trend bar, but then look at the follow through. A much smaller bar, and then an even smaller bar, and then a trading range bar, a doji. Not ideal for the bulls. The momentum is getting smaller. We're getting much smaller bars, and if we look at a smaller time frame, this is a channel, and it might be 2 or 3 pushes up. And the big picture is important. Remember, this is a late leg, so again, this might be more of an exhaustion gap than the start of a bull trend. The bulls buying up here are buying momentum. I had to pause the recording there for a couple minutes, so I forget exactly where I was at. But I think I was saying the bulls buying up here are buying momentum. And just ask yourself, big bull bar, good for the bulls, but then smaller bar, trading range. Is this momentum? No, this is momentum getting slower for the bulls. And that's a problem when it's a late leg far above the moving average. Possible final flag. So there's problems with this rally. And we had this sort of gradual, endless pullback. If a bull bought somewhere up here, all of a sudden the market's going against them for a couple legs. And then today was sort of the give up. I need to keep today a little bit shorter, so I can't get into too many of the little details today, but there's a few things I want to talk about on this day. The first thing was I think it's really important to keep things simple when you're trading. And the reason I'm saying that is because we had a bear channel yesterday, and then we gapped down into today. And the question is this a bear breakout of a channel, and are we going to reverse and test the trend line? And if you kind of just trade like Forrest Gump, and this is the way that Al talks about it, just kind of trade dumb and think, well, we're going down, we gap down, we have a follow-through bar for the bears, so I only want to sell. So I caught myself overthinking in the morning, and by the time we got bar one, I'm like, okay, we're far below the moving average. We've had, more bearish price action over the past maybe day and a half, and we're gapping down with a fairly big gap, bigger than 0.5% today, with a follow-through bar. So the only thing I'm looking to do is sell. So my options are to be flat or to sell. The bulls, we tried to have a trading range open, but we ended up getting a bear trend from the open. 4, good-looking bull bar, but lots of overlap with the prior bars. And again, the big gap down, we've trapped traders above, and then we got bar 5. Bear bar closing on its low with following bars closing near their lows. This is a strong bear breakout. And the odds are high, probably 80% or better, that this breakout will get a second leg. So as soon as you see bar 6, bar 7, traders are starting to sell closes, sell for any reason. We have a leg 1 breakout. It's fairly strong, uniform sized bars, not much overlap, bars closing on their lows, bear environment. There's a lot of reasons for this to get a second leg down. So we get bar 9, trading range bar. Do you really want to buy above bar 9? Of course not. We have a 5 bar micro channel, strong bear breakout, the first reversal, high probability that it's going to be minor, and traders sold. And then we started to channel, so spike, pullback, and the pullback is warning you that the market is entering the channel phase, and that's what we had down to bar 18. And look right here, 1, 2, 3, 4, right here up to bar 15, we have 4 bars going more sideways than down. So at this point, we have a sell-off, a pullback, sell-off, pause, another sell-off, and we start to go sideways and pull back deeper because bears selling down here want momentum. They're not getting it, and they prefer to sell a pullback. Where does bar 17 test? The most recent strong bear bar. So traders will sell above bar 11 with limit orders. We continued making lower highs and lower lows. We're in a bear channel. And I thought this was really interesting right here. Let's talk about this. So at this point, we've had 2 or 3 pushes down, likely to pull back for 10 bars and 2 legs. But the problem is this is a minor wedge. So what I mean by that is these 3 pushes, they're more clear on a smaller time frame. And so the 10 bars and 2 legs might be on a smaller time frame, which means on the 5 minute, we still might get 10 bars and 2 legs, but it's going to look different on the 5 minute. It's going to be comprised of less bars than maybe 10. Maybe we get 6 or 7 bars sideways to up. So what do we get on 21? Bull breakout, strong enough for a second leg, but it's still minor. So we're still always in short, but probably going at least a little bit higher. 22, now we have 2 legs up. And it could even be 3 legs up. 20, rallied, pulled back. 21, rallied, pulled back. 22, rallied a third time. But 21, 22 looks like it needs a second leg. So bears, rather than selling here, might wait for a second leg to sell. Another pause, and then another rally. So maybe 1, pull back, 2, pull back, 3. And then we get a bear bar closing on its low. So this is a low 3 on a smaller time frame. But on this time frame, it looks like a low 1. We have a micro channel up to bar 24. But when you understand the smaller details, and you see we're in a bear trend, we have 3 or 4 legs up, then a bear bar closing near its low. After coming close to testing the moving average for the first time today, there's reasons to sell below bar 25. And bears will sell 25, taking a chance, and if they get a weak entry bar, they'll just get out of the trade and look for another leg up to sell. But in this case, good entry bar, trap traders below 24 or 25, because 26 was an outside bar, then a follow-through breakout bar, and then another bar, a follow-through for the bears. At a new low, disappointing, but it's the channel phase, so traders are taking profits at new lows and they're selling pullbacks. So the bar 25 low, somewhere in this area, is a test target. You can see 28 came close, and we continued to sell off in a tight channel. 33, that might be a bar where always in bears exit above it, but it's not a good buy. It's a tight channel with not really great buying pressure on the way down. So if you do exit above 33, you might just get short again below 35. But now we have 5 bars sideways. So traders might wait for either more certainty or wait for a deeper pullback. 39, that's a bar that always in bears will get out of. We have several pushes down. We could easily correct to the moving average, or at least test up to maybe bar 35 or 34 high. And then if you get out, you can sell again below 40. And then you get 42. So what's happening in here? We're still channeling down, but we're getting a lot of two-sided trading. Bars are overlapping. Bodies are small. Tails are big. Bull bar, followed by a bear bar, followed by a bull bar. This context is bad for the bulls. Every reversal is minor, so bears will sell a bar like 42. The problem with 42 is that it's strong enough for its own second leg, so bears might wait for a second reversal. 45 might be that second reversal. We rallied on 42, pulled back, tried again on 44, maybe failing, and then there, 46 might be the second leg. 1, pull back, 2, testing a trend line, the moving average, in an overall bear trend. Traders will sell in this area. But a lot of two-sided trading here, so we also will find buyers at a new low. 50, 52, good bear breakout bar, but then bad follow-through. Inside bar with a bull body. So the downside here might be more limited. We're also near a channel line. And then look at bar 54, testing the channel, reversing back up. Lots of two-sided trading in here. Probably have to come back and test somewhere in here. And then we might start to go sideways for the rest of the day. It's also worth noting that a lot of trend days have profit taking at the end of the day. So even though it's been bearish all day, you have to be on the lookout for an end of day rally where bears start taking profits at the end of the day. Let me speed it up here. Bar 63 and follow through 64. Strong enough bull breakout for a second leg, but this is still a minor reversal. We're testing a prior lower high. Maybe this is a major lower high. We broke out to a new low, but all this looks like a trading range. And maybe this is the major lower high, or maybe it's up here. But the point is we have layers of resistance above. So the bulls are going to have a hard time getting much of anything going today with all of the selling that we've had. But still, 63, 64, big enough bull breakout, probably buyers below and a second leg. Bulls don't want to buy up here because we're at the top of a channel, might be at the top of what is developing into a trading range, but maybe they'll buy a breakout test. 65, vacuuming down, testing the breakout point, the bar 62 high, and then traders bought. 66, 65 might need a second leg down, but the bulls they also need a second leg up, and this is becoming confusing. Big up, big down, big confusion. We're probably going to go one tick above 64, but then probably find sellers up there. Good bars for the bulls, but then look what happened. We got the minimum target for the bulls and found sellers, but 66 through 68, strong enough rally for buyers below and a second leg. So probably more buyers below bar, probably 67 rather than 68. Instead, traders bought the close, but then bar 70, what do we have? We have a breakout attempt of a double top 64 and 68. And we're trying to break out above it. Anytime you get a breakout attempt of a double top, it's effectively a wedge. We have 3 attempts up. 1, 2, 3. And it's counter to the direction of the trend today. We may also be coming close to testing certain resistance areas from before, spike, pullback, channel. We're getting close to the start of the channel, which is likely going to be the top of a trading range. We went a little bit higher, but now we have a low 3 below 71. Bulls get out below it, bears might sell, but relatively tight channel. We start to go more sideways. Bear breakout attempt, reversal, but probably sellers up here. And then more sideways into the close. So you can see at the end of the day, there was some profit taking. We did rally, but it was a rather weak rally. 3 pushes up with deep pullbacks, lots of overlap. Trades I took today, I only took really maybe 2 trades. I sold below bar 6, sold the close 7. And then I took part off on the close of bar 11, but then added again when 12 retested the 10 low. And then I flattened on the close of bar 14. And that was all I did today. Stop order trades. You could sell below 1, gap down and follow through. Other traders will wait for more information. You could sell below bar 5, taking a chance, or wait for 6, higher probability, sell the close, sell below. 7, you could sell. 8, you can sell. Strong bear breakout, you can sell with stop orders or at the market. But it starts getting really two-sided in here. Better for limit orders. Traders are selling above bars and taking profits below. I mentioned bar 25, reasonable stop order sell. You could also sell 26. And then it got really two-sided in here again. So still channeling down, but hard to stay short and hard to enter with stop orders. And then over here, maybe you can buy above 66, expecting 63, 64 to get a second leg up. But if you are taking that buy, you're scalping, you're not expecting a bull trend. And then there might be a sell below bar 71, but you probably exit around break even, maybe with a small win because you're disappointed with your follow through. Maybe a tight bull channel, 2 legs down. Maybe you take a chance buying above 76, but after consecutive big bear bars, trading range environment, maybe not the greatest. Plus it's late in the day. Limit order trades. A lot of limit orders today. Probably sellers above bar 3. And then maybe buyers below 4, but you can see they got trapped. And then on the way down, sellers above 9. And you can think about this. Every bad stop order is a good limit order. So if you would not buy above bar 9 with a stop, then you can probably sell above bar 9 with limit order. And that goes for any of these trades. Bar 15, probably sellers above. But in this case, better to sell above the most recent strong bar, like bar 11 here. And then on the way up, 3 or 4 pushes, high 1, 23, probably sellers above 23. Same with bar 32, sellers above. And then all through here, it's a tight channel for the bears, lots of overlap, sellers above bars and buyers below bars all the way down. Became a little bit parabolic on 54, and this channel, relatively weak, lots of overlap, probably going to test back up here at a minimum, and this will evolve into a trading range. Remember the market cycle, channels evolve into trading ranges. This channel was tight, this was more two-sided with a lot of bull bars and lots of overlap. This looks more like a bear leg in what will become a trading range. But it's hard to buy when you haven't had any closes above the moving average all day, and the buying pressure has not been all that great. But once you get 63, there's a limit order buy at bar 60, the bar 62 high, and then trading range behavior here. We have a breakout point, 66 high here, did not quite get retested on 68, so we retested it on 75, 2 legs down, that's a buy zone. And we're channeling up, so sellers above highs on the way up. Where do we go Monday? Based on the 5-minute chart so far, this to me looks like a weak rally, maybe a wedge bear flag, and this entire sell-off might need its own second leg down. But the correction might not be done. We may have to go a little bit higher to find more sellers. But if we look at the daily chart, the next target for the bears, I suspect, is, let me just see, did we reach 50% today? So we did reach 50%. I think the next target for the bears is the bottom of the buy climax, the bottom of the bull leg down here. For the exhaustion, this does look like exhaustion. This is not what the bulls wanted. The bulls wanted sustained buying and momentum, but instead we got a loss of momentum and then a bear breakout. This bear breakout will probably get a second leg, but we're at support. We're at a 50% pullback of the rally, and we may have to bounce here before we go lower. But even if we do bounce, I do suspect there are sellers above, trapped bulls above, desperate to get out, and then that may lead to a second leg down. The rally also started with a weak buy signal, and weak buy signal bars often get retested, and the market looks like it's converting into more of a trading range at this point. And breakout points, gaps close in trading ranges. So climactic, maybe a little bit of a climactic bar on the daily chart today. We may have to pull back. Bears take profits, bulls buy 50%. We may bounce, but I do think any bounce will be minor and we'll end up getting a second leg down after finding sellers above. But after a trend bar, what I'm expecting is disappointment for the bears. We might be in the middle of a trading range. We are in the middle of a rally and we are finding support. So we may have to bounce and go sideways for a couple of bars, and then traders will decide whether we're going to retest the highs or get a lower high and then sell off deeper. All right. Thanks everybody for watching, and I hope everyone has a good weekend.